Welcome to the deep dive. Today, we're really drilling down into the oil and gas sector.
Yeah, we've got quite a stack of recent reports to sift through.
Exactly. We're looking at stuff from RigZone, oilprice.com, CNBC, a market analysis from the Pipeline and Gas Journal. That's a key one for the midstream sector.
Right, and the EIA data, of course, can't forget the U.S. Energy Information Administration. Reliable stuff.
Always. So the mission today, basically, is to cut through all that noise. I want to give you a clear, insightful picture of the key trends, the price swings, what's influencing things,
Or without making your head spin.
hopefully.
And what immediately jumps out, really, is just how interconnected everything is. You got geopolitics, OPEC plus strategies, even like weather forecasts,
Yeah.
all feeding into this complex energy picture.
Okay, so let's start with oil prices then. That seems like the obvious place. It's definitely been moving.
For sure.
So May 21st, we saw prices dip, right? Brent crude at $66.37. WTI West Texas Intermediate at $62.56. That's according to oilprice.com. Now, the interesting part, or maybe the confusing part, is this happened even with all the talk about a potential Israeli military strike against Iran.
Right. You'd think that kind of news would push prices up, wouldn't you? Instability in the Middle East usually does.
Exactly. Feels like those two things should be going in opposite directions.
Yeah, and that really highlights the different forces pulling on the market right now. Because RigZone reported that alongside those geopolitical worries, you also had news about U.S. oil stockpiles going up.
Okay. More supply.
More supply, exactly. And also the strong possibility that OPEC plus the big group of oil producers, they're thinking about another output increase.
Okay. So more potential supply coming too.
Exactly. And those supply side factors, the actual barrels available or potentially available soon, they can often hit prices harder and faster than even like big geopolitical headlines.
So even the threat of something major happening in Iran wasn't enough to stop the price drop when you factor in rising stockpiles and potential OPEC action.
It seems that way, at least for that moment.
And RigZone also reminded us just before this dip, prices had actually been climbing pretty strongly.
Yeah, they had some upward momentum.
WTI even got above $61 earlier in May, apparently on hopes around trade deals or something. It really shows that constant push and pull, doesn't it?
Absolutely. And, stepping back a bit, RigZone mentioned that former President Trump apparently prefers U.S. oil between $40 and $50 a barrel.
Interesting. Any idea why?
Well, speculation, obviously, but maybe, to help U.S. shale. Or perhaps gain some geopolitical leverage. Could even be about keeping gas prices lower for consumers. Lots of potential reasons.
Right. And we saw how sensitive the market is just days before this recent dip. Remember, there was that threat of new sanctions on Iran.
Oh, yeah. Prices jumped like 11%, didn't they?
Exactly. Just shows how quickly things can turn on a dime based on policy talk.
Definitely.
So digging into why prices might be trending down now, RigZone had some analysis around May 15th. They featured analysts from the Oxford Institute for Energy Studies and BNP Paribas Exane.
Okay, what were they saying?
Basically, that worries about future demand, coupled with this expectation of more oil supply coming from OPEC plus DIBA. Those were the key things putting downward pressure on prices.
Right, so it's not just current supply, but anticipated future supply and demand. That makes sense.
It kind of makes you wonder about how much weight geopolitical risk actually carries right now compared to these market fundamentals.
That's a great point. Like oilprice.com talked about a potential Israeli strike on Iran's nuclear sites. Obviously, that could disrupt supply, could mess up the nuclear deal talks too.
For sure. Huge potential impact.
But the actual impact on prices, it seems to depend heavily on a whole bunch of other things, including, as oilprice.com noted, whether an attack even happens, which they suggested might even be tied to former President Trump's dealings with Iran.
Wow, okay. Complex web there.
Very.
So let's turn to OPEC Plus then. They're always a major player. RigZone reported just May 22nd that they're actually considering another pretty big output hike for July.
Another one. Okay.
Yeah, a supersized one was the term used, I think. Decisions expected around June 1st. And this comes after they were already talking about boosting supply earlier, which, as we said, helped push prices down recently.
So the direction seems to be towards more oil, not less.
It looks that way, yeah. The sentiment seems to be leaning towards pumping more.
But, what are their real motivations? It's always the question with OPEC+. RigZone had an analysis from Seb suggesting OPEC Plus wasn't trying to deliberately crash prices with previous hikes.
Okay, so not necessarily trying to flood the market intentionally.
Maybe not. And Standard Chartered apparently thinks there are two main factors guiding OPEC plus policy, though the report didn't spell them out.
Right.
And then you've got other layers, like oilprice.com reporting Kazakhstan keeps producing more than its quota allows.
Ah, so not everyone's perfectly sticking to the plan anyway.
Exactly. Adds another wrinkle to managing that overall supply picture. It's not always this perfectly unified front.
Yeah, sounds like a group with maybe some different priorities internally. Okay, let's switch gears. Natural gas. Sounds like that market had a big jump recently.
Yeah, it's a significant one. Pipeline and Gas Journal reported a 10% surge in U.S. nat gas prices just on May 20th.
Wow, 10%. What was behind that?
Well, a few things seem to line up. Pipeline and Gas Journal pointed to a dip in the average daily gas output in the lower 48 states in May. LZEC data showed that.
Okay, so supply dropped a bit.
Supply dropped. And then combine that with what analysts call technical buying.
Technical buying, what's that exactly?
It's basically trading activity that gets triggered automatically by computer systems when prices hit certain chart levels. Often happens after a price has fallen below a key average, then bounces back.
Ah, okay, so chart patterns triggering automated buys.
Pretty much. And those two things together, lower output and technical buying, really gave the price a boost.
Interesting how those market mechanics can have such a real effect. The report also mentioned that short-term demand for heating and cooling is kind of low right now.
All right, we're in that shoulder season.
You'd think that would keep prices down, letting more gas go into storage.
You would. And Pipeline and Gas Journal did note that storage levels were already above the 5-year average. So inventories are pretty healthy.
But there's always a but.
There's always a but. The longer-term forecast. The National Weather Service is calling for a hotter than normal summer across a lot of the U.S.
Ah, air conditioning season.
Exactly. And that means more electricity demand. And a lot of that electricity comes from natural gas. So the expectation of higher future demand seems to have played a big role in that price jump.
So it's this balance between low demand right now and the prospect of much higher demand coming soon.
Precisely. Current lull versus a potentially hot summer driving up consumption later.
Got it.
Yeah.
The Pipeline and Gas Journal also mentioned some practical things, like pipeline maintenance.
Yeah, they mentioned work on Kinder Morgan's Permian Highway pipeline. That kind of maintenance temporarily reduces how much gas can flow.
And that affects regional prices, right? Like
Yeah.
at the Waha hub in Texas.
Absolutely. It can cause bottlenecks and price differences between regions. They also noted a drop in the average amount of gas flowing to the big U.S. LNG export plants in May.
Liquefied natural gas exports. Okay.
So these kinds of supply adjustments, whether they're planned maintenance or something else, they ripple through the market.
Makes sense.
And interestingly, we also saw the EIA, RigZone reported this, the EIA actually lowered its Henry Hub natural gas price forecast for 2025.
Oh, so they expect prices to moderate a bit next year.
Seems like it. But, just before that forecast, RigZone had reported that nat gas, which had been seen as oversold, had that sharp bounce higher we talked about.
Right, the 10% jump. Volatility is the name of the game.
Totally. And even before that jump, RigZone had outlined 3 reasons for a price pullback. So it's just constantly shifting.
Yeah.
And one last piece here, an earlier EIA report from April noted that U.S. gas inventories finished the winter at a 3-year low.
Okay, so starting the injection season a bit lower than recent years. That could matter if the summer is really hot.
Exactly. Sets the stage for potentially tighter supply later on.
Man, it really is a complex mix, isn't it? Supply, demand, infrastructure, weather forecasts, all tangled up.
It really is.
Okay, let's pivot now. Policy and geopolitics. Always a huge undercurrent here.
Always. And yeah, quite a bit happening on that front recently.
Like what?
Well, Deutsche Bank, for instance. RigZone reported they've paused putting new restrictions on financing oil and gas projects.
Oh, why?
Citing legal risks, apparently. Worries about being seen as boycotting fossil fuels in the U.S., essentially.
The whole ESG debate and its legal complexities.
Exactly. It really highlights that ongoing tension and the tricky legal ground for banks navigating ESG, especially in the U.S. context.
That's a significant move. Suggests maybe some pushback against the divestment trend.
Could be. We also saw, according to RigZone, thousands of UK business leaders calling for an immediate end to their energy profits levy.
The windfall tax on oil and gas firms.
That's the one. So the economic pressure and the ongoing debate about how to tax the industry, especially when prices fluctuate.
Meanwhile, the Trump administration, RigZone reported, is looking at potentially selling ocean mining rights off American Samoa.
Yeah, it seems like a continued push towards opening up more areas for resource development.
Hmm.
And related to that, the DOE, the Department of Energy, came out supporting more LNG exports.
Right, positioning the U.S. further as a major global gas supplier
Guess so.
and internationally, what's happening there?
Well, the UK and the EU agreed to link their carbon markets. That's pretty significant collaboration on climate policy.
Hmm.
And back in the UK, the legislation for Great British Energy, that new public energy company, actually passed through Parliament.
Okay, so a potential shift in the UK's energy landscape there.
Could be. It's such an interesting mix, isn't it?
Mm.
Policy supporting traditional energy alongside moves towards cleaner energy and different market structures.
Yeah, it really is. Rigzone also mentioned the former president might target energy grants for audits, and the GOP talking about phasing out current energy credits to pay for tax cuts.
Right, illustrating how much policy could potentially swing depending on, future political outcomes.
For sure. And then there were visits, deals. Former President Trump visiting Saudi Arabia.
Ukraine's parliament approving a resources deal with the U.S.
Mark Carney in Canada suggesting maybe tweaking green laws to boost energy projects.
Right, all showing how interconnected global energy policy is. Plus, the U.S. and Saudi Arabia inked new deals on energy and critical minerals.
Cementing that relationship.
Ghana's apparently adjusting rules to speed up oil extraction.
Hmm.
And then there's the ongoing stuff with Russia, the U.S. resisting EU pressure to lower the Russian oil price cap.
Saw that on oil price and CNBC.
And Russia detaining that oil tanker that left Estonia, which Rigzon reported. Just a stark reminder of the tensions and potential disruptions still out there.
It really feels like every political move, big or small, sends ripples through the energy markets. Okay, let's touch on some broader market trends and analyses before we wrap up.
Sounds good. Well, the IEA, the International Energy Agency, Rigzone reported they're forecasting global oil demand growth to slow down for the rest of 2025.
Slower demand growth.
Yeah.
That could keep downward pressure on prices, couldn't it?
Could do, yeah. Fits with some of the other things we've seen. We also learned from Rigzone that Russia's oil export revenue hit its lowest point since 2023 because of lower prices.
Okay. Interesting little data point. After falling for weeks, the number of active drilling rigs in North America actually ticked up slightly.
Yeah, first time in months, Rigzone said.
Hmm.
Though it came after, 10 straight weeks of decline.
Right, so maybe just a blip. Or maybe an early sign of a shift. Hard to tell yet.
Too early to say. We also saw Equinor, the big energy company, is thinking about pulling the plug on a New York offshore wind farm project after some talks at the White House.
Shows the challenges still facing renewables projects, even major ones.
Definitely. And the EIA lowering its WTI oil price forecasts again suggests, maybe a general expectation of prices staying relatively range-bound or slightly lower near term.
What about M&A? Any big deals brewing?
Well, Rigzone mentioned chatter about a potential BP Shell mega merger. That would be huge, especially in Europe.
Wow, yeah. Okay, shifting to the consumer side, the EIA had some good news, relatively speaking. Gasoline prices heading into Memorial Day weekend. Lowest in real terms for several years.
Right, that's definitely welcome news for drivers hitting the road.
Definitely. The EIA also put out a ton of other interesting bits. China's dominance in battery minerals trade.
Yeah, the risks to refineries from hurricane season coming up.
Expected rise in U.S. hydropower next year.
Projections for slowing global oil consumption growth, but rising U.S. electricity consumption after years of being flat.
Right, that's a big shift. Plus, electricity prices creeping up, big differences in bills between states.
And that amazing stat about, completions per location more than doubling because of tech advancement.
Yeah.
Huge efficiency gains there.
Incredible. We're also seeing sustainable aviation fuel starting to take off, literally.
Yeah. Insights into why California gas prices are so high.
Always a question.
And data showing slightly lower oil prices and refinery margins in Q1. U.S. oil companies spending less on interest despite higher rates, which is kind of counterintuitive.
Yeah. How does that work?
Good question. Maybe restructuring debt earlier.
Hmm.
And U.S. fuel imports were down in 2024.
Okay. And on the renewables and corporate side, what did CNBC have?
Quite a bit. Solar stocks took a hit after a Republican tax bill seemed less favorable than hoped.
Ouch.
The former president apparently wants coal to power AI data centers, which the tech industry is wary about.
That's a clash of worlds right there.
Big time. Aramco's profits dipped slightly. Chevron slowing down share buybacks, citing tariffs and OPEC plus uncertainty. Shell, on the other hand, launched a new buyback after beating profit forecasts.
Mixed signals from the majors then.
Very. Also, the former president threatening to bar companies doing business with the U.S. if they buy Iranian oil. CNBC highlighted the struggles of the U.S. oil industry despite the drill baby drill talk. BP also reported a sharp profit drop.
Seems like a tough quarter for some.
Yeah, there's growing interest in white hydrogen that's naturally occurring hydrogen. Amazon and NVIDIA saying they'll use whatever works, including fossil fuels, to power AI.
That energy demand from AI is becoming a huge topic.
Massive. OPEC cut its demand forecast, citing trade war uncertainty. Goldman Sachs interestingly said oil and gas stocks should be core to ESG funds.
That's controversial.
Definitely raised eyebrows. U.S. Energy Secretary expressed confidence in shale despite price drops. Worries about trade wars hitting U.S. production.
Oh, yeah.
Potential for lower oil prices to blow out Saudi Arabia's deficit. And U.S. crude closing below $60 at one point due to trade fears.
Phew, that's a lot. It really is a snapshot of just how many forces are acting on this whole energy world right now.
Absolutely. Dynamic and interconnected doesn't even begin to cover it.
Okay, so to try and wrap this deep dive up, what are the key takeaways? We've seen, really volatile oil prices. They're getting pushed and pulled by geopolitics, sure, but also very much by OPEC plus production decisions and inventory levels.
Right, and the natural gas market had that big surge driven by that combo of supply dips and those forecasts for a hot summer bumping up expected demand.
And then layered over everything are these ongoing policy shifts, political debates, both domestically and globally, affecting everything from taxes and regulations to international trade and the pace of the energy transition.
Yeah, constantly shaping the landscape, from fossil fuels right through to renewables.
So that leaves us with a final thought, something for you, the listener, to chew on.
Yeah, when you think about this really complex interplay, you've got global events, you've got amazing technological advances in getting energy and these constantly shifting energy policies.
How can we as individual consumers, or how can different industries, best get ready? How do you prepare for what seems like continued price swings, continued volatility, and maybe some really big long-term changes in the whole oil and gas picture?
It's a really crucial question, isn't it? Something we all need to think about as we navigate this ever-changing energy world.